Do you want to win with your money? I see people struggling every single day. And do you know why? Well, for the most part, it's because they don't understand how their money works. The fact is, you cannot improve anything that you're not aware of. That's why I made this series, Understanding Your Money, to help you have a better grasp of the most important financial concepts that you need to understand in order to be successful with your money. Now, I created 30 bite-sized videos teaching you everything you need so you can make the best financial decisions in your life for you. Now, without financial freedom, there is no freedom at all. So make sure that you subscribe so you don't miss any of the videos in this series. Also, if you find value in this, please share this video out and this playlist out because of the fact that I know it's gonna help so many people. As we're entering this recession that's coming right now, actually, I would argue we're already in it. This information is more important than ever, so let's do this. Hey, what's going on, Cash Flow Hackers? It's Chris, and we're back with the Understanding Your Money series, and today we are talking about opportunity cost. And honestly, this is one of my favorite topics and concepts that I think people need to understand. And I think when you do understand it in this context, it will shift and change everything that you do with your money. The way you think about money, the way you understand it, the way that your decisions are made around money are going to be dramatically impacted based on your understanding of the concept of opportunity cost. And so for this video, I'm going to go through, and you can see here I have cars, coffee, and houses, right? Like, because these are areas that everybody does, right? Like, you know, I guess not everybody drinks coffee, but most people do. And even if you don't, you probably have something that you do, whether it's tea or just going out to dinner or whatever. The concept is just little tiny expenses that we're making that we don't think about the long-term consequences of that. Now, so let's break down opportunity cost into its simplest component. What is opportunity cost? Opportunity cost is simply saying, when I spend $1, I don't just lose that dollar. I lose what that dollar could have earned me forever. Now, one of the last videos that came out in this series was the time value of money video. When you talk about time value of money, and when you talk about the rate of return that you can get based on the fact that, hey, if I had, well, let's just use an example here. If I did a coffee at $5, right, and I spent $5 on this coffee, I don't just lose that $5, I lose what that $5 could have earned me at, say, 4% over the next 30 years, right? Now, I don't know what that adds up to, but I do know that it winds up being way more than you think, right? So actually, I can tell you, we could do the math, right? So if I say $4 or 4%, how do we do this? We go back through, and this is just going to be something really fun to figure out. So we go 4%. How long is it going to take for that $5 to double? We say, okay, 4%, we go 72 divided by 4 is what? It's 18, 8, 16, 24, 32, 40, yeah, 18, okay? So every 18 years, the $5 is going to double. So if we know that at 4%, which is, you know, there are accounts that we can put our money in and that we can save and get 4% on a guaranteed basis over a long period of time, that if we know this $5 is going to double every 18 years, so that means 36 years from now, that's going to go from 10 to 20 bucks, right? So 18 years and then 36 years from now, it'll be 20 bucks. So basically, for most people going for retirement, every time you go and buy a Starbucks, it's costing you $20 at retirement on a guaranteed basis. That is understanding what the opportunity cost is. When I spend that money, I don't just lose access to that, I lose access to what it will be worth in the future, what that money will have earned me. Now, how does that impact every other decision that we make? Well, cars, think about it this way. When we go buy a car, let's say we go buy a $40,000 car, right? So when we buy a car for $40,000, think about it this way. When we buy a car for $40,000, what do most people do? The idea, and this is my challenge with people like Dave Ramsey, is because they don't take opportunity cost into the equation when making their decisions. And so what Dave would say is pay cash for it, okay? This is the problem. When you pay cash for it, what happens? You don't just lose that cash, you lose what that cash would have earned you for the rest of your life, right? Now, here's the other thing about this. When you buy a car, right, you have to make sure that you want to make sure, obviously, from a cash flow perspective, you can afford it. But even if you pay $40,000 for that car, what does it do? It depreciates in value, right? It goes down in value. And so 5 years from now, because most people won't keep their cars for much longer than 5 years, right? So 5 years from now, you're either saving money from a cash flow perspective. That money is getting saved every single month, right? Probably saving a couple, like whatever the car payment is, every single month for the next 5 years, because otherwise you're going to get to the end of the 5 years and you're going to turn this car in, you're going to have to finance it. So if you believe that paying cash is a way to go for the car, you're always going to have cash flow coming out of your life for your next car, right? Does that make sense? Because if I finance it, I got to make the car payment, but if I pay cash, I now don't have access to that cash, so I got to be saving for the next time I want to get a new car, okay? And so my point to really sharing that is that it's all about cash flow, right? Whatever you can afford for cash flow, make sure you're in alignment with reality on that. A lot of people extend themselves from a cash flow perspective, and obviously that can be detrimental. And so here's the deal, though. Most people that say pay cash for the car don't understand the concept of opportunity cost, because let's say I could earn 4% on a guaranteed basis, right? And then that car, instead of paying cash, I could go out and pay 1.9% for it, right? So why would I take $40,000 on this? And what is the opportunity cost on, if I got, I'm actually going to make this 2% just to make my job easier. So what is the cost? What is the opportunity cost of paying cash for that car? Well, at 4%, if we know we can earn 4% on a guaranteed basis and our cost for that is 2%, so we go 4 minus 2 is a 2% opportunity cost, right? So if we go there and we go the rule of 72, 72 divided by 2 equals 36. That means this is going to double in value, or double every 36 years. And so not only did we spend that 40,000, but we lost what that could have grown to, right? And so we basically cost ourselves $80,000 in opportunity cost by paying cash for that car. Now, here's the challenge, and this is my big challenge is with people, and this is the power of understanding opportunity cost, is when you understand this, you understand that, I don't know if you know this or not, but the average 65-year-old in the United States right now, do you know that their average retirement account is about $250,000? That's average, okay? Average is $250,000 of retirement money sitting in their accounts. They're going to work, they're saving, they're investing. They're not saving, they're investing their money into these qualified accounts, into brokerage accounts, and this is what they're ending up with. And they're not able to maintain their standard of living when they retire. Now, here's the deal. $250,000 is nothing when you have to meet a $50,000 plus annual lifestyle, right? It's nothing. It's not going to get you there. And when we talk about taking a small, like say 10% of our income and investing it, taking on risk and getting there, when you understand this concept of opportunity cost, what you're allowing yourself to do is increase the efficiency of your financial life. And when you increase the efficiency in your financial life, simply by understanding opportunity cost, how it all flows together, what it leads to for future value, you can now focus on volume versus rate of return, right? It's about how much money is flowing through our system. And when we try to recapture this opportunity cost and increase the efficiency in our life, now we can go, and just this one financial decision is going to get me an extra $80,000 in retirement. That's 25% of what most accounts have. I don't know about you, the people I hang out with buy more than 4 or 5 cars throughout their life. They'll probably buy 6, 7, 8 cars throughout their life if they're just an average person going through a car every 3 to 5 years, right? And so the way you finance your cars, this is why I'm saying you can have an extra $400,000, $500,000 in retirement simply by understanding opportunity cost. Now, obviously, there are other elements that come into this. To get a 2% finance rate, you better have good credit, right? To do this, you need to make sure that you're saving the money in the right place. These are all things that I'm not going to get into, like where to save, how to build your credit. I'm not going to get into all that. We have other videos in this series that are going to be talking about that, so make sure you subscribe and hit the bell. That way you're notified when those videos come out. But the bottom line is that just understanding these concepts will increase your financial efficiency, and they're going to help you get to your desired goal on a more predictable basis, and it's going to put you in the driver's seat, you in control of actually achieving the objectives that you're after. You're not just going to take a small percentage of your money, invest it, take some risk, give it to a money manager, and hope that they're going to get you there and just kind of like feel helpless about the situation, right? This is a scenario where you have 1000% control. And I'm going to tell you right now, if you did nothing else except for increase the efficiency and understand opportunity costs as to how it pertains to these three areas, this is the average person in America right here. You are going to 3 to 4x that without even having to worry about anything else. It's all about financial efficiency if you just understand these three areas. So that is that. If you have any questions about this, I want you to comment in the comment section below. I can do more content. I can do a deeper dive. I've got some other content already that I could share with you. Let me know what you have for questions. Let me know where I need to elaborate, where I need to explain for you to be able to kind of implement this in your life and understand it on a deep enough level so that you can execute. Once again, these numbers, there are places you can do all this stuff, but you just need to understand who you need to become to be able to leverage and execute with all the right accounts in the right areas and the right, with the right credit scores and just managing all the elements of your finances. And that is why I'm putting this entire series together to help you understand it and break it down into bite-sized chunks so you can. So anyway, that is it for this video. Once again, comment if you have any questions, subscribe, hit the bell, that way you're notified if you haven't already. And I'll see you on the next video. Have a blessed, inspirational day. We'll talk then.